Hi there, thanks for joining us. I'm Carrick Steers.
And I'm Vicente Cantua.
We are with SVN Desert Commercial Advisors here in Phoenix, your multifamily experts. Thanks for joining us. We want to take this time to shoot out you guys a quick video and let you know a little bit of overview of where we are in our Q1 review, a little bit of where we've been for Q1 and where we're headed for the rest of 2018. One of the great things about our market here in Phoenix is that we have great income growth. Year over year, as you'll see on the screen now, our market is at 4% income growth, which is the best in the nation. The next closest market is San Diego at 3%, and the national average is 2%, as you'll see on the screen. So one of the things that makes Phoenix great to invest in is we have the income growth, the population growth, and the employment growth.
Yeah, as you can see here, the rent growth is also something we have, and that's actually great because you want to be investing in some place that has some runway where your investment can keep growing. So if you look at Phoenix right now, you'll see that we're right around 5% rent growth or year over year, and if you look at the national average, it's at about 2.5%. So we're essentially about double what the national average is right now. And then the next slide here, you can see that your top two, the discretionary and upper middle range, is more of your luxury units. So those are commanding high rents over $1,000 per month, and they're getting about 4% rent growth there year over year. And then if you go by your renter by necessity, the last three categories there, that's where you're seeing your slightly higher rent growth at about 6%, which isn't really that small at all. Actually, it's still quite significant. And so you'll see that the rents they're paying there are quite lower, in the $600-700 range, but they still have plenty of runway to go, as we've seen already. And then we like to track a couple different cohorts of the multifamily arena. So we'll go 10 to 99 units, and then over 100 units. So what we're seeing now is still increases in the 10 to 99 units. So if you look just at the sales volume, we did about $100 million in the Q1 of 2018, and if you look at 2017, we did 86 million, so that's a 16% increase. The price per unit is still increasing, this time by 17%, and we're approaching the $100,000 per door mark for under 100 unit properties. I mean, you see that a lot in over 100 units, but under 100 units, we're actually approaching that. And in fact, we sold the property in Tempe for $100,000 a door, and it was a 6.2 cap on the actual numbers. So our market is certainly reflecting what we're seeing the stats here say. And then, of course, the price per square foot is also jumping up 22% now to $125 a square foot. And the vintage of the properties is fairly the same. It went up a couple years, so nothing significant. So 1971 is the average year that these properties are trading at. And then if you look at the top transactions by price per unit, the number one was the 41 unit Dusk in Scottsdale, which was almost $300,000 per unit at $282,000, and that was recently built in 2016. And the second highest was the Revival in Tempe. That was built in 1983, and that traded for $184,000, $194 a square foot. And then the third highest price per unit was the Village 28, which was called Trice Arcos, and the buyer actually paid $1 over list price for a full $4 million price for the 25 units, so $160,000 per unit.
Great. And when we take a look at the properties that traded in the first quarter over 100 units, we had an 88% increase, almost double, at $1.3 billion trading this quarter. And the price per unit went up 57% to $157,000 per unit. Price per square foot up 38% to $174. And what's really underlying here is there were a lot of new properties that traded this quarter. And so the average year build was up 6 years from last year, first quarter. And so the average vintage being 1991. But we definitely saw some top price new transactions that traded. For example, the Villa Tempe was the highest priced asset per unit for the first quarter, $252,000 a door. Then we had the Broadstone at Fashion Center that traded $250,000 a door, and then 56 North trading at $223,000 a door. So those properties like those that were just built in the last couple of years and just stabilized, that traded this quarter, really caused that momentum to increase for the average price per unit and price per square foot. But overall, in the market, we're definitely at the peak. We definitely are at prices pre-recession now that we're fully recovered, and we don't know how much longer this will last. We definitely know we're at the top of the market right now. So if you're sitting on a property and you've been contemplating what to do, please reach out to us. We're happy to give you a consultation and see what your best options may be, whether it be to sell or continue to hold on. We do know that if you are continuing to hold on, you should be prepared to ride out another cycle, which could be another 10 years. So it can be a good time to buy. It can also be the right time to exit the market if you don't want to hang on for another 10 years. So please reach out to us. We're just a phone call away to give you guys some advice.
Absolutely. And as far as the supply coming on the market, we have 2,000 units that were recently completed in this last quarter. We also have 17,000 units that are under construction. So when those units come on, you're going to have, again, additional pressure on the rents in your Class A product, because pretty much all those are going to be Class A. And then you do have another 10,000 more that are planned and 13,000 that are prospective. But planned is a better idea of what's actually going on, what someone might actually do. Perspective is a little more iffy, but just the fact that 17,000 units are under construction alone, that's going to add a lot to a pipeline pretty soon here. Mm-hmm.
So looking into what the rest of 2018 has in store for us, we definitely see some more interest rate hikes coming down the pipeline, which will have some downward pressure on prices and cap rates and what investors are willing to pay for properties. We see rents continuing to go up, maybe not 5%, but maybe more in the 3 to 4% range. Occupancy, a little bit of downward pressure as the new units come online and owners are having to lure in prospective tenants with bonuses and some free rent to get them in. We also see employment continuing to grow here in Phoenix, doing very well with that. Transaction volume for apartments similar to 2017 levels. Price per unit continuing to have a bump up there, and a little bit of fewer permits pulled as the majority of the projects in the pipeline have been started, and so just fewer permits going forward for new construction projects. So again, just to recap, we're happy to give you a consultation on your property, and even if you don't want to sell, we're happy to help you give advice on ways to increase revenue, lower your expenses, and overall maximize your investment while you continue to hold the property. So please reach out to Vicente or myself. We're just a phone call away.
Absolutely. Have a great day.
Thank you for your time.
All right.